monthly, weekly, daily, and 4 hour. The four major time frame most trader uses to do the multi-time frame analysis. But do you know that depending on your trading style, this time frame may not be very effective to do the multi-time frame analysis. Now, if you are a scalper, for example, if you are doing the multi-time frame analysis based on the monthly, weekly, daily, and 4 hour, most likely that you are missing the real time frame that you need to do, as scalping is always on the lower time frame. Similarly, if you are a day trader and trading on the 15 minutes time frame, then most likely you don't need that monthly or weekly analysis on your multi-time frame. So what is the correct way to do the multi-time frame analysis? This is what exactly in this video I'll be demonstrating to you depending on your trading style. I'll be showing you exactly what time frames you should be considering when you are taking into account the multi-time frame approach. So if this is something you are interested in, make sure that traders you give a thumbs up and also subscribe to the channel if you haven't done yet. So without further delay, let's get started. Okay, traders, so before moving forward, I have a good news is that this week we are giving away full discounted $500 coupon only for limited number of traders who are passionate about learning and growing as a trader in Forex Trading Wizard Academy to access the full spectrum of our courses as well as all the tools that I'm using in the academy. So the only thing that you need to do to be qualified for this full $500 discounted coupon is using the link below this video, our recommended broker. Just sign up for the broker, put forward at least $100 deposit, and then email us using the link given below. In return email, we will be sending you that $500 worth of coupon to join for completely for free for the lifetime, and this offer only valid for this week. So make sure that you do it right now as soon as you see this video. So with that said, let's move on to the lesson. Okay traders, so the market either will go up, down, or sideways. As you know that we cannot trade sideways, so either we have to buy or we have to sell. Now when it comes down to the multi-time frame, that first of all we'll be discussing about the scalper who needs to do the multi-time frame. Now in my way that I do multi-time frame, I divide them into two major components. One is what I call the base time frame, the other one what I call the secondary time frame. So when it comes down to the base time frame, what we look at is the entry time frame. In fact, you need to answer two most important questions, which is the what I call the double W, which way to trade, when to trade. So when to trade comes in the entry time frame, when to trigger that buy or sell. Now the other time frame that we must consider is the secondary time frame, which is the directional bias. Now if we consider the example on 1 minute chart, that if we are scalping on 1 minute, then this 1 minute time frame will be our entry time frame, where we will be finding out the candlestick pattern or the liquidity candle to find an entry. And the other time frame that we will be considering is the secondary time frame, which is the directional bias. So now let's look at the real chart to see exactly how to find those base time frame as well as the secondary time frame to find entry opportunity in the market. Okay, so when we are looking at this multi-time frame approach, let's look at this example on gold 5-minute chart. Now when we are looking at gold 5-minute chart, what we can see that the market has dropped strongly to this level, has gone up for a pullback, and then has dropped again, has gone up for a pullback, has gone up again. So we can see that this market is maintaining typical downtrending market structure. Now, if you are trading on 1 minute chart as a scalper, the most important part here is we need to look at the higher time frame. As a rule of thumb that I look at is 2 higher time frame than the base time frame to find the directional bias, which is the secondary time frame. Now here we can see that gold on the 5 minutes, what we can see that this market is maintaining typical series of lower high and lower low with this impulse, which is in fact a downtrending market structure. Now when we see this kind of downtrending market structure, the next step is for us to find an important area of value. So if we look at here, what we can see that from this structure, which is the market has broken below this structure, which is the support here. If you look at, this is the support here, which is a very important level of support on gold. And as if you look at this base time frame, what we can see is lower time frame that we will be looking for entry, but the secondary time frame that we can use for area of value, which is absolutely important, because when we are entering the trade on the lower time frame, such as on the 1 minute or 5 minutes, if we are using as a base time frame, the higher time frame such as the 5 minutes, 15 minutes, that we need to look at the directional bias as well as for the area of value. So what we can see here, let's drop down to now the 1 minute chart to see where is the market is heading. Now if you closely look at what we can see, that here is the market forming series of lower high, which is basically a typical downtrending market structure. Very simple. Now how we can find now the area of value, potential area of value for this trade. Now if you look at closely, what we can see that this is an important area of value, which is support here, a very important level of support, which is turning resistance on the 1 minute chart, which is an area of value. Now if we replay the chart, what we can see that the market is in fact heading to that level where we have defined as an area of value. Now if you closely look at, you can see the market has just crossed that important level. This is the 1 minute chart. Now this is our base time frame, which is the entry time frame. As from the secondary time frame, we found an area of value, and we found that in the base time frame, now we need to see complete change of trend, because if you look at this is why it is important for the multi-time frame, guys. You can see that this is the 1 minute chart, and in this 1 minute chart, which is the base time frame, the market is maintaining typical bullish market structure. What you can see, it's a bull market, right? So in this typical bullish market, if you look at maintaining series of higher high and higher low, which is in an uptrending market structure. Now when you look at this, we could think of buying, and that's the secret here, because when you look at a market, but as a matter of fact, as we have the multi-time frame confirmation from the 5 minutes that we have seen already, this is a downtrending market structure. The multi-time frame approach, as we can see that this market, if you look at the 1 minute chart, is a bullish market. We could think of buying, but when you look at this market from the multi-time frame approach, it's a selling market. That's the paradox. That's the most important part that you need to look at when you are entering the trade. Now you can see that the market in fact drop back from that level, guys. Look at this one here. You can see that from this level, the market has a straight breakdown, and that's the power of understanding the multi-time frame approach. And the most important part here that you need to look at, when we can identify the secondary time frame, then we can identify the base time frame. And when we can align the directional bias, which is in the secondary time frame, base time frame, the entry criteria, and we can align both of them in the same direction. So when it comes down to the 15 minutes as a base time frame, we will be using the 4 hour that I personally use 4 hour for our secondary time frame, which is the highest time frame, and then scale down to the lower time frame. So you can see that this is the intraday or 4 hour time frame. Now this higher time frame, which is our secondary time frame, we'll be using to find the major direction of the trend. Now you can see that here is an impulse correction, impulse correction, impulse deeper correction, and the market is trending with series of higher high and higher low, which is in an uptrending market structure. Now when we understand that from the secondary time frame the major direction, we are almost certain about the directional bias, which is very important for our decision. Either we will be buying or selling. The next step is to scale down to the entry time frame. Now entry time frame here, if you look at, guys, in this example, let's look at this entry time frame, how the price is doing. Now if you look at the 15-minute chart, here is a very strong liquidity candle. Now if we turn on that liquidity candle, what do we see here? Which is a very strong liquidity candle. The market grabbed that liquidity and then bounced back to the upside. Now this liquidity candle is signaling potential entry, candle entry to the upside. So as I mentioned in the beginning of this video, we are giving away $500 full discounted lifetime access plan this week for limited number only. To grab that before it is ending, just use the link below this video. So to get access to that full discounted $500 coupon for limited time only, right now you can just use our recommended broker to sign up and put forward at least $100 or more deposit, and then email us your detail. We can forward you the coupon straight to you via a return email, so that you can get the full access to all the tools that I am using, such as the liquidity candle, strategies, as well as the courses that we are offering in Forex Trading Wizard Academy. So with that said, let's see now, once we identify our entry time frame and found our entry candle, the next thing is just to do the proper risk management and keep moving. And as you can see, when we find suitable entry based on the strategy, which is very important as we are looking at the multi-time frame approach, and when we find those entry candles, it becomes much easier for us to enter and then hold the trade for bigger profit. I strongly believe that traders, you enjoyed this analysis as well as important lesson, and also press that bell notification so that you are notified as soon as more content has been released. With that said, thank you, and I'll see you soon in my next analysis.